Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from United States Lime and Minerals. Sounds boring, right? Well, what if I told you this report hints at whether they're building a financial fortress or teetering on the edge of a cliff? Let's find out. First off, United States Lime and Minerals. They're in the business of lime and minerals. They provide these products for construction, agriculture, and environmental uses. They are based out of Texas. This is an 8K filing, which is basically an oopsie, something important right now kind of form. The report is dated April 30, 2025, so it is fairly recent. The main point of this filing is to share their financial results for the quarter that ended in March 2025. They released a news release that day announcing the financial results for the quarter. Let's take a look at what they said. Here's the actual news release. It contains all the important numbers about how the company performed financially during the start of 2025. Let's dive in and see if it's good or bad. Okay, for the first 3 months of 2025, their net sales, that is sales after discounts and returns, were $64.3 million. That's the revenue they brought in. To know if that is good, we need to compare it to last year. Okay, so for the first 3 months of 2024, they made $67 million in sales. That means they made about $2.7 million less this year. That's a decrease. That's like losing almost 4 cents for every dollar made last year. Not good, but let's see if the rest of the report tells us why. Net income is their profit after they paid all the bills. They made $9.7 million this year. How does it compare to last year? They made $11.5 million in the same period last year, which means their income also dropped by nearly $2 million. The company's sales went down and their profits also went down, which is not a good sign at all. Now let's see why. Here's a possible reason their sales went down: because they simply sold less lime and stone products. Why did they sell less? The reasons they give for selling less lime is mostly due to weaker demand. They say that because of weather, construction projects got delayed. Also, some big customers just needed less lime. It sounds like things outside their control were the cause. They say they are watching the market closely. This is corporate speak for we're keeping an eye on things and hoping they get better. They also mention that they are managing costs carefully. Cutting costs is what companies do when sales go down. That way they can keep the profits up. Looking at the numbers, it looks like they did a pretty good job managing the costs. The amount that they spent to make their products went down. This is thanks to lower prices of natural gas, less maintenance, and also less depreciation. However, one thing that went up was their selling, general and administrative expenses, also known as SG&A. These are the costs for running the business, such as salaries, marketing, and rent. It went up by about $700,000. This increase was mainly because they had to pay more for legal stuff, professional fees, and travel. These are the kind of costs you want to keep low. The company is taking a hard look at its plan for spending money. They are thinking about whether to keep going with current projects or find ways to save money in the future. Let's talk about the company's liquidity, or how much cash they have. They have $30 million in cash and $40 million available in credit. They seem to have enough money to keep the lights on for now. The report also mentions some risks that the company faces. These are things that could hurt their business in the future. One risk is that their sales depend a lot on the construction industry. If construction slows down because of the economy or other reasons, they sell less lime. They are also at risk from changing fuel costs. Fuel is a big expense for them, and prices can go up and down quickly. If fuel prices go up, their profits go down. Another risk is competition. There are a lot of other companies that sell lime. Some of these companies are bigger and have more resources. This means they can sell lime for cheaper or offer better deals, which makes it harder for United States Lime and Minerals to compete. Environmental laws and regulations are also a risk. Lime production can have a big impact on the environment. The company has to follow a lot of rules to protect the air, water, and land. These rules can be expensive and hard to follow. If they don't follow the rules, they could get fined or have to shut down their operations. Finally, lawsuits are always a risk. The company could get sued by customers, employees, or other people. Lawsuits can be expensive and take up a lot of time. They can also damage the company's reputation. Now let's step back and look at the big picture. United States Lime and Minerals had a rough start to 2025. Sales and profits were down. They blame it on weather and lower demand, but it's still a concern. They are managing costs well, but their administrative expenses are creeping up. They seem to have enough cash to weather the storm, but they face a lot of risks. The biggest risks are the economy, fuel prices, competition, environmental laws, and lawsuits. What does this all mean? The company is in a tough spot. They need to find ways to boost sales and cut costs. They also need to manage their risks carefully. If they can do these things, they can turn things around. If not, they could be in trouble. This is a business in a somewhat old-fashioned area, so it might not be able to pull up profits like a high-tech company would, so it's hard to tell. Thanks for watching. If you found this helpful, please like, comment, and subscribe. Let me know what company you'd like me to decode next.